I mean, give me a break here, right? We know that these guys have much better things to do than to pick at each other on the social networks. But billionaires be billionaires, boys be boys, right? We got some top story of the day, and take a look at this. Elon Musk is mocking Meta CEO Mark Zuckerberg's July 4th surfing. I mean, give me a break here, right? We know that these guys have much better things to do than to pick at each other on the social networks. But billionaires be billionaires, boys be boys, right? They're just gonna be mocking each other. Let's see what it says here. Elon Musk razzed Mark Zuckerberg after his fellow tech billionaire wished America a happy birthday with a patriotic bout of wave surfing. I'm not gonna lie, that's kind of badass. If I could do that, I would definitely do that too, right? With I don't know what he's drinking there, but it better not be a Bud Light. I'll put it that way. I don't know what he's drinking there, but holding the American flag like that in a tuxedo on a board right there, that's kind of a cool look. I like it. Uh, Musk chimed in on a tuxedo wearing Zuckerberg simultaneously surfing and holding an American flag, drinking from a can. But a brief but sharp comment: "May he continue to have fun on his yachts. I prefer to work." Ooh. The surfing stunt was part of the Meta platform CEO's participation in Independence Day celebrations. The holiday fell on a Thursday this year. Zuckerberg's video featured a patriotic compilation of activities. Born in the USA was playing in the background. The remark from Musk, who helms the electric vehicle maker Tesla, blah, 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 really doesn't matter. It was a reply on another X user that expressed negative opinion about Zuckerberg. And Musk criticized and trolled him. What do you think about this? Let me know in the comments down below how you feel about this. But you know what is not trolling is what's going on with Tesla's stock price recently, right? We actually set off a buy signal here in Outlier on what day was that? June 17th, when it was around 187. Now it's up at 230 or so, give or take. So what did I say that was? June 17th. Let's take a look. June 17th to now. I mean, this is one of those glorious trends that you always wish that you had a part of, right? 36%. 36% in how many? 12 trading days. That's huge. And I'm telling you, right, as a Tesla owner, as a Tesla fanboy, as a Tesla stan, whatever you want to call me, I think this is great. I am all about this. I think this is definitely going to be changing the world. So, curious to see where this leads. Certainly with this order block right here, I would be looking to potentially take some profits off the table when it's gone up 36% in the span of 2 weeks. So, pretty great trade right there. Now, let's take a look at our market analysis. All right. Welcome to the Outlier Trading Room. This is how to trade only 10 minutes a day and exactly how to take the guesswork out of trading. Now, full disclosure, I'm a partner with Outlier, and this is my style of trading using Outlier, but Outlier delivers you new opportunities every single day. And this is using the golden ticket trading strategy, which is the 8 steps to turn profit hacking into pure gold. So it always starts with the market. We're going to trade with the trend of the market. We're going to let the market tell us which direction it's going. So we look at the SPY, hitting new all-time highs right here, 10 over 20, price over the 50. This is why I say, when a trend is going on, don't get in the way. Don't try and short this, right? It'll run you right over. I learned a lot of lessons about this, right? I just recently watched a YouTube Shorts video by Alex Hermosi, and he was talking about, going from a dumb person to an average person to a smart person to a really smart person to an incredibly smart person. And he was saying, a dumb person makes mistakes and doesn't learn from them. An average person makes a mistake and learns from it. And then it was something like, and a really smart person listens to other people so they don't make the mistakes that that person did. And I'm telling you, don't get in the way of trends. I learned a very, very, very many, very expensive lessons about that. So if you do so, at your own risk. It's like standing on the track and letting the train come right at you. So the market is pushing higher. Market breadth, we see within the Outlier platform. We're going to drop the 5 and add the 10 EMA. We're going to look for the bull list percent crossing up higher. So this is the number of stocks on the bull list, the number of stocks with buy signals, and it is growing. And that's what we want to see for market breadth. So before we put on any trades, we need to reduce risk by taking off or adjusting some trades we have on already. And the trades we have on right now are in BG. In fact, let me pop these up. So BG and SFM, Sprouts. So we'll let those load up. Sebastian is here. Good to see you, Sebastian. So let's start with BG. BG was one that we rolled on. What day was that? That was Tuesday. We rolled up BG. And one of the reasons we roll up is for days like this, right? Now, I will be 100% honest with you. I should have closed this on Wednesday, but I was not watching the market. I was in a meeting. And had I been watching it, I know for a fact I would have said, okay, we need to close this. Unfortunately, that lost me about $1 per trade right here. But we should still be profitable on the trade. In fact, because we rolled up our strikes, we actually lost less on the trade with it coming down than we would have had we done nothing with the trade. So let's go ahead and look to close BG because it is below the half ATR from the rolling point. I don't need to look at it for any other reason. So BG, July 19th. Give me a second here. BG, July 19th. $105 calls. That's what it was. BG, July 19th, 105 calls. So we're going to look to close this probably at 420. So closing the full order on BG. Filled at 420 immediately. Okay. So let me fill in my data over here and I'll tell you how that trade went. BG. Okay, so we 420. Yeah, small winner. We got into BG at 835. Okay, so imagine that's negative 835 is what we paid for it. And then we rolled up for 455 in credit. And then we just took it off for 420. That means we made 40 cents on 835. So about a 5% winner. It was okay. Would have been much better. 4.73% is my actual return on capital. Yorn, I see your Discord message here. Okay, let me go over here. And then let me copy this. By the way, I'm annoyed at Mahesh because Mahesh and I both bought Google. I took it off. I'll show you why I'm annoyed at Mahesh. I'm annoyed because he's doing so good on this trade. I took it off on this date right here. I took off Google right here because it closed below my half ATR. That's my rules. I had to stick with them. And then it's just rocket ship today. And, it's kind of flirted with where we started at, but I took my risk off the trade right there. And that's just so frustrating, isn't it? I hate it, hate it, hate it when that happens, especially when I know somebody in that trade and he's making money and I'm not. So I'm annoyed for him that it is working, but I'm happy for him that's working too. Today's the 5th. Close BG. That was the 105 calls for 4.20, right? Yes. And that was a small win of, and that did what to the portfolio? Not a whole lot. Plus 57 basis points. Close below half ATR. Okay. All right. So then we need to go to the next trade, which is SFM. This one's just been flirting around where we got in. Maybe we can get in with a small profit. Let's see. Closing the full order. Oh, why am I closing it? Actually, let's go back. Why am I closing it? So it's moved up to G16 and G13 was where I was going to exit. Always planned on exiting at G13 because that's my exit point here when it started in the R on the behavioral heat map. So G13 was always going to be my exit. And it actually hit G13 today. Today is the day that it hit G13. It was G12 on Wednesday, G16 today. So it did it today, which is all right because we made more money than we would have on Wednesday. So let's see if we can catch any profit on this trade. This is SFM. This is the July 19th, 80 calls. And maybe we can get out 365. Maybe. Still working. All right, let's replace it. Try 360. Where are we going to end that at? We got it at 390. Okay, so it's going to be a small loss. Work it down from 360 to 350. 350. Okay. Filled at 350. Filled at 350. So small loss on that one. So today, yeah, it's just almost net zero today. Small win on BG, small loss on SFM, and a big, well, I shouldn't say big. I was going to say a big middle finger to Mahesh, but no, I don't want to say that. A nice pat on the back to Mahesh. That's actually how I feel. I don't want to discourage Mahesh. I'm excited that he's doing really well. In fact, that part of our call was he was like, "Man, this is so great. This is working so awesome for me lately." And I'm like, "Awesome. This is good. Good, good, good." All right, let's close SFM. BG out at 415. Where's my note on SFM? It's been a few days. There it is. Closed it out. What was it? I don't remember. My short-term memory is kind of terrible. 350. And that did what? That was a 10.838% loss on that trade. But because of position sizing, that did 69 basis points. And heat map stall. No, heat map target hit. So, like I say, on the whole, down a couple bucks, but overall, it's all right. Yorn's out. Yorn back to flat. Are you back to flat? Let's see if there's any new trades to put on today now. So we'll go to the watch list. And now that we've reduced risk, right, we're back to our full portfolio here. We're looking to look at the bull and bear list with filtered on the green and red overlays. So we're going to look at the bull list. All right, he's flat. I did. Oh, it was Tuesday. This errored out. It was a server error. You guys were here for it. Yeah, it was a server error. And so I was texting Mahesh and Mark and I was Skyping Mahesh and Mark and I'm like, fix this now. And it was fixed like 20 minutes after the market closed. So unfortunately, it was one of those things that we just like nobody anticipated that to happen. But that's just how it goes. We got it up and running within an hour. So that was actually really good. Unfortunately, for my timing, it didn't work out that great. So what I did earlier today, I'm just going to shortcut this for you, was I took the buy signals from Tuesday and Wednesday and today. So all the way from the second, which there were plenty of, and I filtered for them and I dropped them into this bull list right here. So there was quite a lot. Now they're not all great, right? They don't all fit in my criteria, right? Like this one today, I definitely wouldn't take this trade today because it's well below yesterday's low. So that's what this scanner is for here. It's going to check for a handful of things. And it's going to make sure there's no order blocks in the way. The price is going in our direction. There's no earnings in the next 3 days. So looking at this, only 3 pop out. I'll refresh this one last time. I mean, we can go through it if you want to see, but like JPM was one I was looking at a couple days ago. It's below yesterday's low, so I wouldn't get into that. Let's see. Goldman Sachs, also below yesterday's low. G Diddy, this is one I was looking at a few days ago. I'll tell you what, let's go through this list real quick because that one should have pulled through. So definitely no, below yesterday's low. This one is on my list. Okay, PBA in an order block. MWA. Oh, it's 1842. I'll take a look at that one. I'll tell you what. Let me adjust my filter real quick because we did really well on one the other day that was at like 1996 instead of $20. Hang on. I'm just going to adjust this. I'm going to call it $16. Let's call it 1750. Greater than 1750. Save. Because that does open up a couple opportunities for us, like this one here. By the way, Mahesh has told me that the updates for the filter screening process should be coming out really, really soon. So that'll be great. Yeah, there's that one right there. Because it looks sharp and it's got, 50 cents or so. What is that percentage terms? About 3% that it could move up. We could make some money on that. Morgan Stanley below yesterday's low. MFC. This looks okay. It's on my list. Mara within an order block. KGC is only $8. JP Morgan below yesterday's low. ING. This one looks okay. Not a whole lot of movement. I don't know anything about ING. We'll take a look at it. Infin, $6. Goldman Sachs below yesterday's low. G Diddy. Why would G Diddy not pull up? It might be that it's too close to this order block, why it's not tripping through, but I think G Diddy could work. I'm gonna add a flag on G Diddy. We traded G Diddy not that long ago, I remember. There's no order blocks in the way or earnings the next few days. Court. Yeah, no, definitely not. Cinex. Cinex looks okay, yeah. AMC. This has been on my list for a few days now. One that I'm watching. It might do the squeeze, the one that they want. We'll see. Okay, so we're going to look at these plus G Diddy. So that's 1, 2, 3, 4, 5, 6 that we're going to look at real quick. So let me pop up some screens here. 1, 2, 3, 4, 5, 6. All right, so let's start with MFC, MWA, Shell, SHEL, CENX, CENX. Oh, that was the wrong one. CENX, ING, and last one is G Diddy. Now, we're going to do a really quick check on the outlier signals. Make sure they have a positive expectancy. And then we'll check the breadth of that sector as well whenever we get to each one. So G Diddy, yep. Market breadth on the tech sector. Let's go to that real quick. Yeah, market breadth looks all right in the tech sector. That'll do. Go to the next one. ING, 32% looks good. Let's go to financials. That looks good. All right. Really strong right now, in fact. CNX. Oh, really positive right there. Materials. Loading. There we go. Drop the 5, add the 10. Yep, market breadth looks good on that. Already checked. Did we check Shell? I guess we didn't. That's positive. Let's look at energy. I mean, they may all be positive. I don't know. But we got to take the moment to look at them. Let's check these two while that's loading. That one's positive. And that one's positive. So they're all positive today. We already checked financials. Industrials is the other one we need to see. So let's let this load on industrials. Okay, that finally came through on energy. Oh yeah, energy is ultra strong. Industrials. Oh, going slow. I don't want another server crash again. Okay, back in business. And that one's also market breadth looks good there. Okay, so we may be putting on 6 trades. So let's take a look. The next step is to start with the highest back test and work our way down. So that's 25, 20, 47, 233. So that's up front. 32, 122. All right. Next would be 25 or 20, 47, and 32. All right. So I got them in order. Let's take our look on the options chain. I want to see 21 days to expiration, 250 plus open interest, less than 50-cent bid-ask spread, 20% or less extrinsic, roughly 80 delta. So let's start at the top with CENX, CENX. July 19th is about 14 days. It's either 14 or 42 on the monthlies. I would rather go with 14 here. And open interest is okay. I like over 250. These are all over 250. Extrinsic value, 49 over 190 is what? 25%. That's okay. Versus this one here, 20. That's about 10% there. We could go with either one. This is about 30% less in cost. It's 35 cents wide. This is 10 cents wide. I'd rather go with this one. It's closer in width on the bid-ask spread. And it has less extrinsic and there's more volume. Yeah, this is the one. Okay. CENX, 18 calls. CENX, get your position size. And I always like to say, if you don't know your position size, go to the Discord, go to the VIP Investors Toolkit, click on this power scanner right here. It's going to pull up this file. You can just type in CENX, just like that. And then add in your account details and such, and then it will give you approximate position sizes. All right. CENX. CENX, 18 calls on July 19th. All right, let's see where we can get filled. All right, I actually got filled at 264. 264 is my fill price on CENX. Drop it in the Discord. That was July 19th, CENX, 18 calls for 264, and it's currently at 2034. All right, that's trade number 1. Trade number 2. G Diddy. And let's go to G Diddy. July 19th. Oh, that's interesting. So we just paid, what did we pay? 264 on a $20 stock. And this is roughly the same price on a $143 stock. Okay. I was thinking to myself, man, that position size looks really small for this small of a stock, but the ATR percent of the stock must be really big. Okay. Part of the game, G Diddy, July 19th. And let's look. around the 80 delta. Oh, open interest is not there. Doesn't matter. I won't trade it. I mean, we're not even close on open interest on anything. This is somewhat close, but still no way. Okay. GD's off my board. Let's go to Shell. SHEL. Okay, now we've got some open interest here. Roughly 80 delta puts us here at the 71s, 10 cents wide. See what I mean? That first one must have been really expensive on the ATR value because or the option premium is just huge there because it's 265 on a $71 stock. That's interesting. Versus 265 on a $20 stock. Huh. Okay, either way. 37 cents on 265. 13%. Okay, we could go a little higher. 54 cents on 185. 29. Okay, between the two, I think I'd rather go with this one here. Well, this is 10 cents wide, that's 10 cents wide. So much more liquidity, but it's only 68 delta. What is 27 cents? No, this really is the one. What was that again? 60, 37. No, yeah, 37 on 265. 13%. Okay, yeah, that's really the one. All right, so Shell, 71 calls, July 19th. SHEL, get your position size. Okay. Shell, July 19th, 71 calls. See if we can fill it 260. Probably not. Let's replace that. I'm going to put in 265, see if we can get filled. I filled at 265. Okay. Shell, 71 calls, filled at 265. Two, bought Shell. 71 calls, filled for 265. Interesting. When trading at 73.25. Man, what a difference in pricing on that. 73.25. Okay, next. ING. Yarns at Shell at 265 as well. ING. I mean, there is liquidity here, right? It's under $20, but there's so much liquidity here. 10 cents wide. No extrinsic value. Oh, there it is. 11 cents. So it's basically 10% extrinsic value. 82 delta. Yeah, that looks all right to me. ING. Get your position size. So I'm looking at the ING 17s. ING, July 19th, 17s. Probably get filled around $1. Let's see. Fill it at $1. Yep. There's a ton of liquidity here. ING, 17 calls, filled at $1. And I got a lot of them. Today, number 3. Currently, it's at 1790. Okay. Let's go to the next one after ING is MFC. July 19th. Really, really cheap. Really, really cheap options here. Oh, but the spread's huge. Oh, there's no open interest. Okay. No, thank you on MFC. MWA. This is our last one. July 19th. There's no open interest here either. Okay, cool. So, had lots of opportunities, but only put on 3 today. That was, I know. But listen, Jorn, we had one last week that did really well. I forget what it was. And it was like 1996. And so I didn't want to let this one go away because it really was so liquid. So I just changed the rule to 1750. Mahesh and I and Mark actually had a really long conversation about this the other day. And they're like, Chris, you are really limiting your scope here if you're not going to include something that's just outside of $20. And so I'm open to it. I'm flexible. We'll see how it goes. These are not penny stocks, right? We're not buying like 7-cent stocks and hoping for the best, right? This is still $17. So now I'm going to go through and update these real quick as far as like 1 ATRs, 2 ATRs, and half ATRs. In fact, I can do that real quick with you if you want. Synex, Shell, ING, MFC. I don't know why that one's there. Okay. I don't know why that one's there either. Okay. So, let's go ahead and put these on. I'm going to do split screen so it's a little easier to do all that. Close some tabs. Close this thing. How did I did this before? There we go. Yeah, now I can do this pretty quick. Okay. We'll do ING first. Half ATR is at 1774. One ATR is at 1820. And 2 ATR is at 1850. 1850. Why are you being weird? Okay. Next, let's go to Synex. We're going to look at half ATR at 1979. $21.46 is the first ATR. What is? Oh no, it's not liking me. That was weird. 21.46. Oh my gosh. It is really not liking me right now. Let me refresh. There we go. Okay. And then next one's at 22.57. What the frick? TrendSpider is like eating my lunch right now. 21.57, 22.57. Yeah. Okay. Next, Shell. $72.89. Okay. 74.15. And 74.90 something. 99. Okay. And I think that's it. Did we do MFC? Still need to do MFC. Where are we getting exactly MFC? Did we get an MFC? No, we didn't. That was it. We only got in 3. Okay, so we got our 3 in. We're in. What are we in again? ING, Synex, and Shell. Synex, add to my main list. ING, add to my main list. And Shell, add to my main list. All right, that's going to do it for today. Yeah, we got a lot done today. We opened some, we closed some. Basically, when you're a trader, you're always looking for new opportunities, right? If something's not working, that is an excuse to get out, right? If you don't see the movement you want to see, like an SFM, it really didn't move anywhere. It kind of just drifted up and down a little bit, basically sideways. You can take your money, you can get out, you can move on, right? And then sometimes they take off and they're rocket ships and they're awesome, but you have to be defensive. You always have to be defensive. So start with a defensive mindset, take off things that aren't working, keep on things that are working, and just continuously trade. That's why it's called that, until you get to see the ones that you want, and then hold those until you get a reason to get out. So that's going to wrap it for today. I hope everyone has a fantastic weekend. I'll see you right back here on Monday. Talk soon.